Hey there, let's be real. Life doesn't stop just because your credit score isn't where you want it to be. But let me tell you something. Bad credit does not define you. It's just a hurdle, not a wall. In this set of videos, I'm going to show you how to win at life despite bad credit. And here's the kicker, how to fix it so you never feel held back again. I'll share practical tips for getting approved for things that you need, clever strategies to work around credit challenges, and proven methods to rebuild your credit step by step. Look, I know what it's like to feel stuck, but trust me, you can get through this, and I'm here to help you do it. So grab a notebook, hit that subscribe button, and let's turn things around together because life doesn't wait for a perfect credit score, and neither should you. There are two different sections in these videos. The first section deals with how to succeed in life with bad credit, and the second section deals with tips and tricks to turn bad credit into great credit. I've included a set of contents for both sections, so feel free to jump about to the sections that apply to you. Use the tips in this video wisely and change your life immediately. So let's go, starting with the contents of section 1. Hey, Steve from Compassionate Credit Repair. Now, if you've got bad credit, the idea of buying a car might feel like maybe climbing a mountain without shoes, but I'm here to show you some clever ways to still get that car, even if your credit score isn't great. So stick around because I'm going to share actionable tips that can save you money and help you avoid getting ripped off. So let's jump straight in. First things first, you've got to know your credit score. I know it sounds basic, but this is where most people trip up. You need to get a copy of your credit report from all three major bureaus. Now, why? Because they don't always match. You might have errors on one report or even two, and those errors could be costing you thousands in higher interest rates. In fact, according to a study by the FTC, 1 in 5 people have a mistake on their credit report. So fix those errors before you even think about car shopping. It could give you a bump that saves you a lot of money in the long run. Thank you, Steve. All right. Tip number 2, save for a bigger down payment. Now, I know what you're thinking. Easier said than done, but here's the deal. Lenders look at two things, your credit and the risk of lending money to you. The more cash you put down up front, the less risk you are to them. So, even if your credit score isn't shiny, a big down payment can make you far more attractive to lenders. Plus, it reduces your monthly payment. And trust me when I say this, lower payments equals less stress. If you can, try aiming for 20% of the car's value. That's if you can. Now, if your credit is really, really rough, one smart way to get approved is by using a cosigner. A cosigner is someone with better credit who agrees to share the responsibility of the loan. Basically, they're vouching for you, but here's the thing. They're not just putting their name on paper, they're taking on a real risk. Why? Because if you miss a payment, it hits their credit too. So make sure this is someone who trusts you and who understands the stakes. It can definitely lower your interest rates, though, and in some cases, actually make the difference between you getting an approval or a rejection. Now, next tip, and here's a big one. Don't just go with the first loan offer you get, especially if it comes from the dealership. Dealerships make money off financing, and their deals are often in your favor, especially if you've got bad credit. So instead, shop around for lenders. Banks, credit unions, online lenders, they all offer different terms. And some specialize in working with people just like you who've got lower credit scores. In fact, credit unions tend to offer better rates than traditional banks for people with poor credit. And remember, Every lender looks at your credit history differently, so don't settle until you've compared a few offers. Another clever move, next tip, get pre approved before you step foot on the lot. When you're pre approved for a loan, you walk into the dealership with real power. It shows the seller you're serious and that you already know your loan limits. Now, this can save you from high pressure tactics. We all know what they are, where salespeople push you into a higher loan or a monthly payment that you can afford. Plus, with pre approval, you'll have a much clearer idea of the interest rates you qualify for. So at the end of the day, there are no surprises. Next tip. Now, this option should come with a little warning because it's about buy here, pay here dealerships. Now, these are dealerships where you finance directly with them instead of going through a bank. Now, if your credit is really in the dumps, these places might offer you financing where others actually won't offer you the financing. But the downside, well, you probably guessed, they often charge sky high interest rates and might have stricter payment terms. So, if you do go this route, be sure you understand all the terms of your loan, but it can be an option when no one else will actually give you a shot because of your credit. Next tip, when you're working with bad credit, buying a brand new car, well, might not be exactly your best move. Instead, consider a used or a certified pre owned vehicle. Now, why? Well, first, new cars lose up to 20% of their value the moment you drive off the lot. But with a used car, you can avoid that depreciation and you can find some great deals. Certified pre owned cars come with warranties and have been inspected to meet certain standards. So you do get a peace of mind without the hefty price tag. Next tip. And here's a little known one: use a car buying service. Now, some credit unions and banks offer car buying services that not only help you find a car, but also secure a loan with better terms. These services often negotiate on your behalf and they may have access to deals that aren't available to the general public. It's definitely a smart, hassle free option that can save you both time and money. Finally, don't get tunnel vision when it comes to the monthly payment. It's easy to get swayed by that low monthly number, but lenders often stretch out the loan term to make it look affordable. What this means is you'll end up paying more in interest over time. Focus on the total cost of the loan, not just the monthly payment. A shorter loan term with a slightly higher monthly payment can actually save you a lot of money in the long run. So there you have it. Some clever ways to buy a car, even if you've got bad credit. And remember, having bad credit doesn't mean you're stuck with bad deals. Absolutely not. If you use these tips, you can make smarter choices and avoid the traps that comes with car shopping. Have a great day, guys. Hey, it's Steve from Compassionate Credit Repair. So, are you struggling to rent an apartment with bad credit? Can kind of feel like trying to get into a very exclusive club when your name isn't even on the list. But don't worry, I've got some clever tips you probably haven't thought of that'll help you get into that new place, even with a low credit score. So let's dive in how you can still get that lease signed with bad credit. So, first up, always check your credit report for errors before you apply. And like I mentioned in previous videos, 1 in 5 people have mistakes on their credit reports. Could be late payments that weren't yours, closed accounts that still show open, or even other inaccuracies. So, fixing those errors can give your score a quick bump. And here's something landlords may not know: you can provide them with a corrected report if it's not up to date yet, showing that you've taken steps to absolutely fix your credit. So, tip number 2: bad credit makes landlords nervous. And believe me, I get it. They're trying to protect their investment, but here's a trick. If you offer a bigger security deposit or even a few months' rent up front, you can absolutely ease those concerns. It reduces their risk, especially since they'll have a financial cushion. And sure, It might sting to part with that extra cash, but it can make the difference between getting that apartment or not getting it. And hey, if you're really serious about moving in, this is a small price to pay for peace of mind. On to tip 3. If your credit score's keeping you from sealing the deal, a cosigner can be an ace in the hole. See, a cosigner with better credit makes landlords feel much more secure because they got a backup in case you can't pay. But remember, this is a huge responsibility for the cosigner because obviously they're on the hook if something goes wrong. Another option you could use is to find a roommate with stronger credit. Landlords often take both credit scores into account, so a solid score from your future roomie could absolutely help the playing field. On to 4. Even if your credit score isn't the best, a steady paycheck can speak volumes. Provide proof of consistent income or employment, like your pay stubs, your tax returns, or even a letter from your employer. Show that you make enough money to comfortably afford the rent. Some landlords may overlook a low credit score if they see that your income is reliable and you're financially stable right now. It's all about giving them confidence that you can meet the monthly payments. On to tip 5. And here's another gold nugget. Highlight your rental history. Just because your credit score isn't the best, it doesn't mean you've been a bad tenant. If you've paid rent on time before, make sure your potential landlord absolutely knows it. So gather references from past landlords and put together a list showing your track record. If you've never missed a rent payment, that's huge for a landlord because they care more about getting paid than what's on your credit report. Next up, tip 6. Sometimes renting from private landlords is a game changer, unlike big property management companies, because private landlords are often more flexible and willing to negotiate. They may not rely as heavily on credit scores, and they might prefer a face to face meeting where you can explain your situation directly. Now, this can be an opportunity to show your personality, prove that you're responsible, and of course, establish trust without being judged purely on your poor credit score. Finally, tip number 7. So, offering to set up automatic rent payments can absolutely help you lock in that apartment. Why? Because this gives landlords peace of mind that they'll get paid on time directly from your bank account. So it's one less thing for them to worry about, and it shows that you're organized and committed to paying on time. So there you go. 7 clever ways to rent an apartment with bad credit. And remember, landlords want to know they're making a safe bet. The more you can reduce that risk and show the responsibility, the better your chances of getting that place. And finally, if you're tired of your credit holding you back, just get in touch with us at Compassionate Credit Repair. We'll help you raise that score and, again, open more doors. Thanks for watching. See you next time, guys. Hey, you struggling with bad credit and trying to get your utilities approved? It may seem like a tough situation, but guess what? There are some clever strategies to get your utilities, the water, electricity, and gas, hooked up without even breaking a sweat. So in today's video, I'll show you how to get approved even with bad credit using some lesser known hacks. So let's dive right in. First off, some utility companies run a soft credit check when you apply. Now, what does that mean? Well, they won't actually impact your credit score when they check it, but they might deny your application if your credit history isn't that great. So here's your first clever trick. Be upfront. Call the utility company ahead of time. Ask if they can offer you alternatives like a deposit or a payment plan if your credit doesn't meet their standards. They often have programs designed just for this. Now let's talk for a second about deposit. This is the most common workaround when you have bad credit. Utility companies often ask for a security deposit as a fallback. Good news? Once you've made on-time payments for 12 months, many companies will actually refund that deposit straight back to you. So think of it as a temporary hurdle that can help you build trust with them. Here's something not everybody knows.
Many utility companies offer prepaid plans. That's right. Instead of waiting for a monthly bill, you can pay for your utilities up front, a little bit like a pay-as-you-go system. It eliminates the need for a credit check, and you only pay for what you use. It's a great option for people with low or no credit. So another smart move is to leverage a cosigner. Just like with loans or rentals, a cosigner can help you get approved for utilities. So if you have a family member or a friend with good credit, they can co-sign on your utility account, giving the utility company peace of mind that the bills will be paid, even if your credit isn't stellar. Here's another gem. Some utility companies offer special programs for people going through financial difficulties. If your bad credit is a result of a job loss, medical bills, or other hardship, you may qualify for reduced rates or low-income assistance programs. Check your utility company's website, give them a call, see what's available. And here's one more important tip. Set up autopay. Some utility companies won't even check your credit if you commit to automatic payments, so it's a win-win. You'll avoid late fees, missed payments, and they'll trust you to keep up with your bills. And here's one for the future forward option. If you're in an area that supports it, consider alternative energy providers. Many of these companies are more flexible about credit scores and can even offer competitive rates if you bundle services like gas and electricity. So don't let bad credit keep you in the dark, literally. There are plenty of clever ways to get your utilities approved, whether it's negotiating deposits, opting for prepaid plans, or even setting up autopay. But just remember, being proactive and exploring your options can get you up and running without the stress. So if you enjoyed this content, please like and subscribe below to get all our latest updates on all things credit. Thank you and have a great day. Bad credit, but still need a cell phone plan? Don't sweat it, I'm here. So if you're worried about getting denied or facing huge deposits, I've got some clever strategies that'll get you talking and texting in no time without having to break the bank. So let's dive into the best ways to get a cell phone plan, even if your credit isn't perfect. Ready? So first things first, prepaid plans are your best friend. Unlike traditional postpaid plans, prepaid plans do not require a credit check. You pay upfront for your service, which means you're never at risk of being cut off for late payments, which is a good thing. Plus, many of these prepaid plans offer great rates and unlimited options without the need of a contract, which is good news. So here's another trick. Don't rush for the latest phone. Please, I'm begging you. If you have bad credit, buying the newest iPhone or the newest Samsung on a payment plan might require a huge deposit or even outright denial. Instead, consider buying a used or older model phone outright. Then, you can easily find a no credit check plan to go with it. You save money and, more importantly, you skip the credit hassle. Another smart move is going with a mobile virtual network operator, or MVNO. These smaller carriers like Boost Mobile, Mint Mobile, and Metro by T-Mobile, they all piggyback on the big carrier's network, but they offer no credit check plans. Often, they've got great deals on talk, text, and data that are just as good as what you'd get with a major carrier, but without the credit stress. So now let's talk about deposit-free, post-paid options. Some of the big carriers actually offer no deposit plans for people with bad credit, but they may limit you to basic plans at the beginning. Still, it's a great way to build up your credit with on-time payments and potentially upgrade at a later date. So look for carriers like T-Mobile and Sprint, which have options for credit challenged customers. And here's a little known trick. Family plans. If you've got a family member with good credit, they can add you to their existing family plan. In this way, you get access to premium services without that credit check, and you can split the costs. So it's a win-win. So there you have it. Bad credit doesn't have to stand between you and a cell phone. So whether it's a prepaid plan, an MVNO, or even getting on a family plan, there are still plenty of options to keep you connected without the stress of credit checks or even huge deposits. Of course, my name is Steve from Compassionate Credit Repair, and if you're looking for more tips on navigating life with bad credit, or if you want to start rebuilding your credit, reach out to us today. And in the meantime, have a wonderful day.
Hey guys, Steve from Compassionate Credit Repair. So if you've got bad credit, getting a mortgage might feel impossible, but I'm here to tell you it's not. In fact, there are smart strategies that can help you buy that home, even if your credit score isn't perfect. So buckle up. I'm going to break down the best ways to secure a mortgage with bad credit with some tips most people have never ever heard of. So first off, let's talk about FHA loans. These are backed by the Federal Housing Administration and are specifically designed for people with less than ideal credit like you. You can qualify for an FHA loan with a credit score as low as 500, and in some cases, you can put down as little as 3.5%. That's huge for people with bad credit. And just so you know, that you'll likely pay mortgage insurance, which protects the lender, but it's a trade off that could help you get into a new home. Now, if your credit score isn't great, one of the best ways to increase your chances of getting approved is by putting down a larger down payment. The more you can put down, think 10 to 20%, the less risk the lender actually sees. Now, this can offset your bad credit and show that you're serious and financially responsible. Plus, it can help you get better interest rates or even avoid private mortgage insurance, PMI. Here's another tip that a lot of people overlook: shop around. Different lenders have different criteria for approving mortgages. So don't settle for the first offer that you get, especially if they're charging sky high interest rates because of your credit. So check with banks, credit unions, and of course, online mortgage lenders. Some of them specialize in working with buyers who have lower credit scores, and you could find much better terms just by comparing options. And also, don't forget to check out non-traditional mortgage lenders like private mortgage lenders or even rent-to-own options. Now, these lenders often don't follow the same strict credit requirements as big banks. Some of them will actually evaluate your financial situation as a whole, not just your credit score. And this gives you more flexibility to get a mortgage, especially if your income is solid but your credit, sadly, is dragging behind. Another key factor that can help you out is debt to income, DTI ratio. Even if your credit is bad, lenders are more likely to approve you if your DTI is low. This means paying off as much of your current debt as possible before applying for a mortgage. A lower DTI shows lenders you can manage your monthly payments. Now, you'd be surprised how much this can impact their decision, even more than your credit score sometimes. Now, if your credit is really, really holding you back, consider getting a cosigner. A cosigner with better credit can help you get approved for a mortgage that you might not qualify for on your own. And just remember, they're on the hook if you miss payments. So please make sure this is someone who fully understands the risks. But it can make a big difference in securing a mortgage with better terms. Finally, consider repairing your credit before you even apply for a mortgage. Eh, It might take some time, but improving your credit score by even 30 to 50 points can significantly change the terms of your mortgage or help you qualify when you couldn't before. And here at Compassionate Credit Repair, just so you know, we help people like you remove errors, settle accounts, and get that credit score where it needs to be so you can make your home ownership dreams come true. So there you have it. Some of the best ways to get a mortgage with bad credit, whether it's using an FHA loan, boosting your down payment, or even shopping around for non traditional lenders, there are options out there. And remember, you don't have to settle for bad credit forever. If you want help improving your score, just reach out to us at Compassionate Credit Repair and let's get you on the path to home ownership. So till next time rather, go chase that dream. Thank you. Hey, you! Got bad credit, but you desperately need a personal loan? Well, don't give up. You might think it's impossible, but think again. Getting a personal loan with a low credit score isn't quite as hard as it seems if you know a few clever tricks. So today, I'm going to show you how to land that loan without feeling you're swimming upstream. Are you ready? Let's go. First up, shop around. Just like buying a car, different lenders have different terms. So don't just settle for the first offer you get. Instead, compare. Check out online lenders, credit unions, even peer to peer lending platforms, because these days there are lenders out there who specialize in working with people who have bad credit and they may offer lower interest rates than you think. And speaking of online lenders, this is where a lot of people miss out. Traditional banks may reject you outright, but online lenders are often more flexible. So platforms like Avant or Upstart assess more than just your credit score. They'll look at your income, your job stability, even your education level. So you could land a loan with reasonable interest rates, even if your score is, well, let's say less than perfect. All right, let's move on talking about co-signers. This can be a game changer. If you've got a friend or a family member with good credit willing to co-sign their credit worthiness, it can offset your bad score. And this could drop your interest rate significantly and make it much easier to get approved. But huge, make sure you can handle the payments. If you miss one, sadly, their credit takes a hit too. Now, next point, don't overlook credit unions. I know I've said it before, but it's worth repeating. Credit unions are often more flexible with their lending criteria than those big banks. If you're a member, they'll likely consider more than just your score. They'll look at your entire financial picture, and in some cases, they may even approve you for a personal loan that a regular bank wouldn't touch. Next up, here's a clever move. A lot of people overlook this, but consider a secured loan. Now, I know secured means you're putting up collateral like a car, a savings account, or even a CD. But by doing this, lenders see you as less risky, which can lead to a lower interest rate and a higher chance of approval. Just make sure you're absolutely certain you can make the payments, because if you default, obviously you lose the collateral. So another little known option is peer to peer lending. Platforms like Lending Club or Prosper, they'll connect you directly with individual investors instead of a bank. These investors are often willing to take on more risk than a traditional lender, meaning they might be more forgiving of bad credit. Just be aware though, interest rates can still vary based on your score. So be sure to compare offers. Here's another pro tip. Look for pre-approval offers that won't ding your credit. So sites like Credit Karma or NerdWallet often show loan offers based on a soft credit pull, meaning you can check your options without hurting your score. Once you find a good offer, you can move forward without any of those unpleasant surprises. Next tip, here's something people don't pay enough attention to: your debt to income ratio. Lenders want to know how much of your income is already going to debt. The lower your debt to income ratio, the better chance you have of getting an approval, even with a bad credit score. So if you can, pay down some of those smaller debts before applying. It could make a very big difference. And finally, beware of predatory lenders. If something sounds too good to be true, well, it probably is. So watch out for payday loans or cash advance offers. They may give you quick cash, but they can also trap you in a cycle of debt with astronomical interest rates. So aim for reputable lenders, even if it means a bit more paperwork up front. So there you have it. Bad credit doesn't mean no options. It just means you need to get a little creative, whether it's finding the right lender, considering a co-signer, or leveraging a secured loan. You can still get that personal loan without getting buried in crazy terms. So that's it, guys. Have a great day.
Got bad credit but want to refinance your loan? Think it's impossible? Well, with me here, it's not. You can refinance even with bad credit. It's all about knowing the right strategy. So in this video, I'm going to break down some clever ways to refinance that loan and get better terms no matter what your credit score looks like. So let's jump in. First thing you need to know, timing is key. Refinancing when interest rates are low can make a huge difference, even if your credit isn't perfect. Lenders tend to look at market conditions too. So, if rates drop, this very well might be your chance to lock in a better deal, even with a lower credit score. Do your research and keep an eye on those interest rates. Next tip, don't go to your bank first. Try your local credit union. Credit unions tend to be more forgiving with lower credit scores and can offer better interest rates than the big banks. Even better, some credit unions will actually offer special refinance programs specifically designed for people with bad credit. And if you're not a member, no worries. It's usually easy to join. Here's a big one coming up right now. Consider a co-signer. If you've got a friend or a family member with a solid credit score, they can co-sign on the refinance loan, helping you secure a much lower interest rate. But remember, if you miss payments, it affects their credit too. So whatever you do, make sure it's someone you trust and commit to making those payments. Simple as that. And don't forget to negotiate. Yep, just because your credit score isn't great doesn't mean you can't negotiate, because you can. Lenders want to keep your business, so you can sometimes convince them to lower your rate or even adjust the terms, especially if you've made consistent on-time payments on your current loan. Now, they'd rather work with you than lose you. Remember that. Want to improve your chances of approval? Well, might be obvious, but work on your credit score before you apply. Now, I know that sounds obvious, but hear me out. Even small improvements in your score, like, say, going from a 580 to a 620, can significantly change the offers that you get. Focus on paying down any outstanding debt or fixing errors on your credit reports. It doesn't take long, and the results can truly be massive. Now, here's a hidden gem, a cash-out refinance. This one's a bit trickier, but it can be a great option if you have some equity in your home or your car. You can refinance for a larger amount than you currently owe and get the difference in cash. Use that money to pay off higher interest debt. Basically, it's like hitting two birds with one stone. Now, this is important. When refinancing with bad credit, patience is definitely your friend. Whatever you do, don't jump at the first offer that you get. Take the time to compare rates, terms, and fees across multiple lenders. The more offers you gather, the better your bargaining position. So, bad credit doesn't have to mean bad loan terms. Absolutely not. But by being strategic, shopping around, negotiating, and maybe even using a co-signer, you can refinance that loan and set yourself up for better financial health. There's no doubt about it. And don't forget, Compassionate Credit Repair, that's us. If you're struggling with bad credit and you need help, please reach out to us. We're here to help you get back on track. So, whether you're refinancing, rebuilding, or just getting started, give us a call. Have a wonderful day.
Hey, Steve from Compassionate Credit Repair. Now, I know, bad credit can feel like a ball and chain, but that doesn't mean you can't enjoy a vacation. So whether you're dreaming of sandy beaches or just a weekend getaway, I'm here to show you some clever ways to travel and book hotels, even if your credit score isn't as hot as your actual travel plans. And don't worry, no camping in your backyard, unless, of course, that's your thing. So, first up, let's talk about prepaid travel cards. So, if your credit score is holding you back from using traditional credit cards, prepaid cards are a great alternative. You can load them with a set amount of money, and they work just like credit cards for booking hotels, flights, and rental cars. The best part? There's no credit check required and no worrying about maxing out your card. Plus, it can help you stick to your budget while you're traveling. Also, did you know there are travel reward cards designed especially for people with bad credit? Yes, they do exist. So, cards like the Capital One Secured MasterCard or the Discover It Secured Card can offer you the ability to build your credit while still earning reward points for travel. Now, sure, the rewards might not be as glamorous as first class lounges, but hey, free miles are free miles. Just make sure to pay the balance in full to avoid those pesky interest rates. Another hack? Use third party booking sites like Expedia, Priceline, or Booking.com. Most of these platforms allow you to book hotels without a credit card using debit or prepaid cards instead. And here's the bonus: some of these sites actually offer you pay later options, meaning you can reserve your spot now and settle up when you arrive. But just make sure you got the funds ready to go so you don't get hit with a surprise at check in. Not into hotels? Okay. Vacational rental platforms like Airbnb or VRBO can be your ticket to travel freedom. Many of these hosts accept PayPal or other payment methods that don't rely on credit scores. So you can book a beautiful space without worrying about your credit holding you back. Plus, you get the added bonus of staying in cool, unique places. No generic hotel vibes here. Now, here's a trick a lot of people don't know. You can use flexible payment options like Afterpay, Klarna, or Affirm to break up your travel expenses into manageable chunks. Some airlines and hotel chains now offer buy now, pay later plans, so you don't have to come up with the full amount right away. But again, just make sure you're clear on the terms so you don't end up paying more in fees than you would with a traditional credit card. And there you go. 5 clever ways to travel and book hotels, even with bad credit. So, whether you're using prepaid cards, third party sites, or breaking your payments into chunks, there are still plenty of ways to hit the road without letting your credit score tie you down. And hey, if you're ready to fix that credit so your next vacation is even smoother, reach out to us at Compassionate Credit Repair. So until next time, travel smart, have fun. Have a great day, guys.
Let's face it, if you've got poor personal credit, the words business loan, well, it might sound like a long shot, but I'm here to tell you that it's absolutely doable. With the right strategy, you can access funding to get your business off the ground or even take it to the next level. So buckle up, because we're about to dive into some powerful, actionable tips to help you qualify for business loans, even if your personal credit is less than perfect. Are you ready? Let's go. Step 1, separate and build your business credit. Now, your personal credit doesn't have to define your business credit, so Get a DUNS number from Dun and Bradstreet and start establishing a profile just for your business. Set up a business bank account, apply for a business credit card, and do me a favor, pay those bills on time. So by building a solid business credit profile, lenders can look beyond your personal credit score, which may not be too great. Next up, explore alternative lenders. Traditional banks may look at personal credit, but online lenders and fintech companies, well, they often focus more on your business's cash flow and growth potential than just on your credit score. So you're talking about platforms like Cabbage, Funbox, and On Deck. They're all known to work with business owners who have credit challenges. Do me a favor, check them out. Sometimes a little outside the box thinking can open doors. Now, next question. Have you got assets? Use them. Secured loans are a great way to work around poor personal credit. With collateral, like equipment inventory or even property, lenders have something to hold on to, which of course reduces their risk. And in return, you'll often face lower rates and a higher chance of approval, even with less than stellar credit. Now, coming up next, another smart move. Bring in a cosigner or a partner with good credit. If you've got a reliable partner who's willing to support your business, well, their credit can balance out yours. Do me a favor, though, make sure you trust each other and you have a solid agreement in place. With a credit-worthy cosigner, you're far more attractive prospect to potential lenders. Now, next up, let's talk microloans. Organizations like the SBA and certain non-profits, well, they offer microloans with more flexible requirements. Community lenders and credit unions are another great source, often prioritizing local business growth over those rigid credit standards. Now, these loans may be smaller, but they're perfect for getting your foot in the door and building a solid payment history, and most important of all, proving that you're a reliable borrower. Now, next up, here's where actual numbers speak louder than credit scores. If you've got strong cash flow or consistent revenue, let it shine. Lenders want to know you can make those payments, so gather up financial statements, cash flow projections, sales reports, anything at all that shows your business is thriving despite your personal credit score. Look for something outside traditional loans. Well, invoice financing or merchant cash advances can provide funding without a hard credit check. Now, with invoice financing, you're essentially selling your unpaid invoices to a lender for quick cash. Merchant cash advances, on the other hand, let you borrow against your future sales. Both these options give you the flexibility to access funds based on your business's actual revenue. So, there you have it. 7 essential tips to qualify for business loans, even with poor personal credit. The truth is, you don't have to let your credit define your potential. By following these steps, building business credit, seeking alternative lenders, leveraging collateral, and showcasing strong cash flow, well, you can secure the funding that your business needs. It's time to stop letting credit roadblocks hold you back. And also, it's time to start building your business on your terms, not theirs. With the right strategy, a business loan is within your reach. Do me a favor, guys. Let's make it happen and have a great day. Divorce isn't just emotional, it's a financial earthquake that can shake your credit to the core. It's painful, it's tough, but here's the good news. You can take back control. So this isn't the end of your credit story, it's just a new chapter. Let's dive into exactly how to repair your credit after a divorce and turn this setback into a fresh start. So, step one, separate finances immediately. Now, this might sound obvious, but believe me, too many people skip it. Close any joint accounts you have together, credit cards, loans, bank accounts, because keeping these open risks your ex's actions impacting your credit. And don't forget to monitor every single account that you're tied to. Make sure that any shared debts are really closed or transferred to avoid nasty surprises on your report further down the line. Next up, update your budget. Your expenses and income have likely changed, so get clear on what's coming in and what's going out. Tighten up and prioritize essentials like housing, food, transportation. Divorce can mean legal fees, so trimming the fat in other areas can give you a cushion. Make it lean and realistic. Step 3. Tackle that debt. Divorce often comes with a pile of it, so start by listing all your debts and, if possible, use strategies like the debt snowball or the avalanche method. Pay off high-interest debts first to reduce the financial bleed, because not only does this lower your debt-to-credit ratio, but it also gives your credit score a boost. Now, I know it's tempting to start fresh with new credit, but hold off. Opening new accounts too soon can hurt your score with too many inquiries. So let your score stabilize a bit and focus on clearing up what you already owe. You're here to rebuild, not to risk more setbacks. Now, once you've separated joint accounts, consider a secured credit card or a credit builder loan if you're starting from scratch. These options will allow you to rebuild with minimal risk. Now, with on-time payments, you'll establish a positive payment history and rebuild your score brick by brick by brick. Divorce is chaotic and sometimes errors slip through, especially when it comes to credit. So please check your credit report at least every few months to catch any errors or accounts that should no longer be active. If you spot something off, dispute it right away. This simple step is key to keeping your credit report clean and accurate. Keeping your balances low on existing credit cards is a real game changer. If you can, aim to use less than 30% of your available credit. Low usage ratios will help boost your score over time and show lenders that you're responsible, even in the face of life's major shifts. So there you have it. 6 essential steps to repair your credit after divorce. And remember, divorce may feel like a financial setback, but it's really a chance to take ownership and build something even stronger. With these steps, you're not just repairing your credit, you're actually reclaiming your future. It's your story, your comeback, and your financial fresh start. So guys, let's make it count. Divorce is not easy, but your credit recovery can be. If you follow these steps, stay focused, you will get back on top. Have a great day, guys. Bad credit? Most people see it as a dead end, or maybe a red flag that shuts doors and stops opportunities. But what if I told you that bad credit could actually work in your favor? That's right, because with the right strategies, you can turn your bad credit into leverage, opening up options, and even creating financial opportunities that you didn't know you had. That sound impossible? Well, stick with me to the end, because today I'm revealing how to turn your credit situation around using your bad credit to your advantage. And by the way, if this video helps you see credit differently, don't forget to like, comment, and subscribe so other people can also discover these strategies and start making their credit work for them too. So one of the biggest advantages of having bad credit is negotiating power. Creditors would much rather work with you than actually write off your debt entirely. So use that to your advantage. Call up your creditors and negotiate for lower interest rates, smaller payments, or even a reduction in your total debt. When they know your credit is low, they're far more open to working out a deal to get something back. Secured credit, by the way, is a powerful option for rebuilding and boosting your score. So with a secured card, you put down a deposit as collateral, which of course makes lenders far more willing to extend credit to you, even with a low credit score. And the best part? Well, responsible use of a secured card will build positive credit history while you control the risk. So bad credit can even be an eye-opener, giving you a clear reason to tighten up your budget and, of course, to track every dollar. Now, when you've got a low score, financial discipline becomes absolutely essential. So use this as a chance to create a strong, consistent budget that works towards rebuilding your credit and sustaining it over the long term. And that's the important bit. Not every lender out there, by the way, requires high credit. There are options specifically designed for people with lower scores, like, for instance, credit unions or lenders that offer personal loans to people with bad credit. Now, these lenders often provide more flexible terms, so do me a favor, shop around. Just be cautious about interest rates and fees, but know that that option exists beyond traditional credit. Now, bad credit can also be your greatest teacher. Use it as motivation to dive into credit education, learning about everything from credit utilization to debt to income ratio. Why? Well, the more you understand, the stronger your financial foundation becomes, giving you the tools to rebuild and sustain a higher credit score down the road. Now, some financial institutions offer secured loans that report to credit bureaus. These loans will allow you to make regular payments and to build positive credit history without requiring that high credit score. Installment accounts like a credit builder loan, well, these are designed specifically for rebuilding credit and can provide a steady boost to your score over a period of time. So there you have it. Yes, you can absolutely use bad credit to your advantage, from negotiating with creditors to exploring secured credit and learning to manage finances with discipline. Bad credit doesn't have to be a dead end. What it can be is a starting point for a new financial chapter for you. So please take control, use these strategies, and turn bad credit into opportunity. And by the way, if these tips were helpful, please remember to like, comment, and subscribe so much more people can discover how to turn their credit situation around. Your credit is only one part of your financial story. So guys, let's make it work for you. Have a wonderful day.
Hope you enjoyed section 1, guys. dealing with how to succeed in life with bad credit. So now let's press on with section 2. And this section is called How to Turn Your Bad Credit into Great Credit. And just like section 1, I'm going to include a table of contents. Please feel free to jump around in both sections to whatever is applicable to your situation. So are you ready, credit warriors? Here's your table of contents for section 2. Enjoy them and use them extensively. Have a great day, guys.
Think that you need to shell out hundreds, sometimes thousands of dollars for a credit repair service? Think again. The truth is, you don't need to pay big bucks to fix your credit. Now, in this video, I'm revealing the exact steps you can take to boost your credit score on your own. No expensive credit repair agencies required, so let's dive into it. Let's go, people. So first things first, know exactly what you're dealing with. Go to annualcreditreport.com and pull your free credit report from all 3 bureaus, Experian, Equifax, and TransUnion. Now, I want you to look at every detail. Why? Because you can't fix what you don't know. Simple as that. Pinpoint every negative mark, every late payment, and any errors. We're about to turn this information into actual action. Now, here's a pro tip. Dispute any errors immediately. About 1/3 of people have errors on their credit reports, and these errors could be dragging down your score. Each bureau has a free dispute process, so use it. File online or send a letter. Just make sure you're crystal clear on what's wrong and why it needs fixing. If they can't verify an item, it must be removed, and that's a free score boost right there. You don't need a third party to negotiate on your behalf. You can do it yourself. Call up your creditors, ask about payment plans, reduced interest rates, or even settlement options if you're behind. Some creditors may agree to remove late fees or even delete a late payment record if you're willing to pay a portion of what you owe. Now, this is one of the fastest ways to repair your credit on your own terms. Next up, credit utilization, and basically how much of your available credit you're using. This is huge for your credit score, so aim to get each card below round about 30% of its limit, and if possible, even lower. Why? Because the lower, the better. High credit utilization can drop your score, even if you're paying on time. So prioritize those balances and watch your score start to climb. If you've got collections, consider something called a pay-for-delete approach. Now, what this means is offering to pay the collection agency in exchange for them removing the account from your credit report. Now, they're not obligated to accept this, but it's definitely worth a shot. And remember, always get any agreement in writing first. Removing collections is a huge win, and you don't need to pay an agency to do it for you. You can do it yourself. Here's the secret to building credit on your own. Secure credit cards and credit builder loans. Now, these are low-risk ways to add positive history to your credit report. Just put down a small deposit for a secured card or take a small credit builder loan, and then make consistent on-time payments. That's important. Why? Because you're proving to lenders that you can handle credit responsibly, which, to be frank, is exactly what boosts your credit score. Think closing old accounts will help you? Think again. Keep those old accounts open because they add to your length of credit history, which can positively impact your score. Also, avoid new credit inquiries unless absolutely necessary. New applications will ding your credit temporarily, so focus on managing what you already have. And there you have it. Everything you need to fix your credit without paying a cent for any expensive credit repair services. And remember, checking for errors, negotiating directly, lowering your balances, and building positive credit history, well, they can all be done on your own. Credit repair doesn't have to drain your wallet. It just takes commitment and action, of course. And remember, you're in control of your credit destiny, so use these tips, take charge, and watch your credit score climb. No pricey services required, so let's make this happen.
Want to fix your credit fast, like 30 days fast? It's absolutely possible with no shortcuts, no gimmicks, just a proven all in DIY strategy that works. So stay with me because in the next 2 to 3 minutes, I'm going to show you exactly how to go from bad to better credit in just 1 month with steps that you can start right now. So let's get right into it. First thing you need to do, pull your credit report from all three major bureaus, Experian, Equifax, and TransUnion. Then head to annualcreditreport.com where you can get them for free. Now, you need to know exactly where you stand. So this is non-negotiable. And now that you've got your reports, look for errors. Believe it or not, 1 in 5 people have errors on their credit report. That could be dragging down their score and, more importantly, your score. Did you find anything wrong? Dispute it immediately with each bureau. Send your disputes via certified mail, and the bureaus have exactly 30 days to respond. Errors that can't be verified, bang, they're gone. Next up, credit utilization. Now, this makes up 30% of your score, so you want to keep your credit usage below 30%. But if you really want to see a boost, aim for 10% or less. Focus on paying down any revolving credit balances and pay them off before your statement date to lower your reported balance. Got collections haunting your credit report? Well, don't panic. Call up the collection agencies and negotiate a pay for delete. What that means is, in exchange for payment, they'll agree to remove the collection from your report. But, and this is critical, get it in writing before you pay a single cent. Now, here's a fast hack. Become an authorized user on someone else's credit card. Go out, find someone you trust with a great credit history, and get added to their account. Their positive history will show up on your report, giving your score an instant boost without adding any debt. Finally, the secret sauce: consistency. Keep making on-time payments, maintain low balances, and avoid applying for new credit during this period. The goal is to show a full month of responsible credit behavior. All right, let's recap. So in just 30 days, you can start fixing your credit by: number 1, pulling all 3 reports; 2, disputing errors; 3, lowering your credit utilization; 4, negotiating pay for deletes; and 5, becoming an authorized user. Number 6, stay consistent. So simple, effective, and actionable. If this video helped you out, hit the like button and subscribe for more DIY credit repair tips. And drop a comment below if you're ready to go all in on your credit repair journey. And remember, 30 days from now, you could be on your way to better credit. So let's start right now.
Hey there, credit fighters. So, have you ever heard of the snowball effect? Well, here's a clue. It's not just something that happens in winter, because when it comes to paying off debt, the snowball effect can actually help you break free from bad credit. So today I'm going to show you how this simple yet very powerful strategy can help you pay off debt faster and rebuild your financial life. Are you ready? Let's roll. So here's how the snowball method works. You start by listing all your debts from the smallest to the largest without worrying at all about the interest rates right now. So let's say you've got a small credit card debt of $500. That's the one that we're going to focus on first. So while you continue making the minimum payment on all your other debts, you're going to put every extra dollar that you can towards that smallest debt. It's like an avalanche hitting the first snowball. So knock out that smallest debt as fast as possible, and when that balance hits 0, believe me, you're going to feel a huge sense of accomplishment, and that's the key. Now, here's where the magic happens. Once you've paid off the smallest debt, take the money you were using for it and apply it to the next smallest debt. For example, you paid off that $500 credit card, now put the same payment towards that $1,500 personal loan. It's like your payment snowball just got bigger, helping you crush the next debt even faster. So the beauty of the snowball effect is that, as you've probably gathered, it's all about momentum. Every time you pay off the debt, you build confidence. You see, you actually see the progress and your payment power grows just like a snowball rolling downhill. So this method is especially effective if you've got a mix of small and medium-sized debts. Paying off those small ones first gives you quick wins, which obviously keeps you motivated to tackle the bigger ones. And guess what? As your debt goes down, your credit score starts improving too. Not only will you be chipping away at the debt, but each time you pay off a balance, it reduces your credit utilization, which of course is a big factor in improving your credit score. So that's the double benefit of using the snowball method. You're paying off debt and rebuilding your credit at the very same time. So if bad credit and debt are weighing you down, whatever you do, don't panic. Start small, focus on those quick wins, and let the snowball effect build momentum. Before you know it, you'll be knocking out debt after debt and watching your credit score absolutely rise. So in case you forgot, I'm Steve from Compassionate Credit Repair. And if you're ready to take control of your debt and rebuild your financial life, please reach out to us. We've helped thousands of people just like you get back on track. So have a great day. Let's get rolling. Hey everyone, Steve from Compassionate Credit Repair, and today we're tackling a big question that I know is on the minds of a lot of people who are dealing with overwhelming debt. And the question is this: should you declare bankruptcy? Is it the fresh start you need, or could it wreck your financial future? So today's video is going to break it down. Now, bankruptcy can seem like a magic reset button, especially when debt is out of control, but it's not a decision to take lightly. There's a lot you need to consider before going down the bankruptcy road. So let's start with the positives of declaring bankruptcy. And yes, there are some upsides to it. So advantage number one, it can wipe out certain types of debt, like credit card balances, medical bills, personal loans. They can all be discharged, meaning you won't have to pay them back. And that is a huge relief if you're drowning in debt. Advantage number two, bankruptcy puts an immediate halt to those collection calls and harassing letters. It's like pressing the pause button on all that stress, which obviously is a great thing. And finally, for some people, bankruptcy can provide a fresh financial start. You'll have the chance to rebuild your credit and start over without that horrific burden of massive debt hanging over your head. Now, just before you jump into it, let's talk about the downsides of declaring bankruptcy, because trust me, there are plenty of those. So disadvantage number one, long-term credit damage. Now, declaring bankruptcy will stick to your credit report for 7 to 10 years, depending on the type of bankruptcy that you file. And during that time, your credit score will take a massive hit. Disadvantage number two, it'll be tough to get credit or loans for quite a while. And even if you do get approved, you'll be looking at sky-high interest rates and, sadly, not so great terms. And here's the big one, and it is a big one. Not all debts can be discharged in bankruptcy. Student loans, child support, and certain taxes usually stick around no matter what. So if those are your main debts, bankruptcy might not be the solution that you are hoping for. Plus, if you're a business owner or you have assets like a home, you might have to sell off property in order to satisfy creditors, and that could seriously disrupt your life and, of course, your financial goals. Now, here's a quick side note. There are two main types of bankruptcy for individuals, Chapter 7 and Chapter 13. Chapter 7 is what's called liquidation. Basically, the court sells off some of your assets to pay back creditors, and the rest of your qualifying debts, well, those are discharged. It's faster, but it's more drastic, and you could end up losing property. Chapter 13, on the other hand, well, it's a repayment plan. You could keep your assets, but you agree to a 3 to 5 year payment plan to pay off some or even all of your debts. It's slower, but it can give you more control over your finances. So the question is bankruptcy good or bad? Well, it depends. If your debt is unmanageable and there's no realistic way to pay it off, bankruptcy could in fact be the tool to help you start over. But the long-term effects on your credit, on your financial opportunities, and even your personal life are extremely serious. So you want my advice? Explore every option before declaring bankruptcy. There may be other ways to get out of debt, like negotiating with creditors, credit counseling, or debt consolidation. You want to make sure that bankruptcy is truly your last resort. So I hope this was helpful, and if so, please leave a like. Remember to subscribe for more vital information on how to boost your credit score. Hope you had a wonderful day. Thank you.
Let me take you back a few years. I was drowning in over $20,000 of credit card debt. Minimum payments were just eating my paycheck. Interest rates were stacking up, and it felt like I was running on a treadmill, going absolutely nowhere. And I'm sure you've felt like that. But then I discovered a strategy that changed everything. Fast forward to today, and I'm totally debt-free. And I want to share with you the exact steps that I took to get there. So stick around, because the very last step I'll share was my ultimate game changer. So are you ready to learn the very best way to handle $20,000 of credit card debt? I hope you are, because if you are, buckle up, credit warriors, and let's go for it. Step number 1, face the numbers. Now, I say this on all my videos. You need to know exactly what you're up against. And this is what I want you to write down. The amount of your total debt, the interest rates for each card, the minimum monthly payments. Those things are important. So for $20,000 of debt, let's say you've got a card at 18% APR with a $10,000 balance and another at 24% APR with the rest. Well, the high interest card is bleeding you dry faster than you think. So here comes a pro tip. Use an online debt calculator to see exactly how long it will take to pay off those cards if you're only making the minimum payments. And here's the spoiler. It's absolutely terrifying. On to step 2. Choose your debt payoff strategy. Now, there are 2 main methods to tackle debt. The Snowball method, that's first. That's the one where you pay off the smallest balance first while making minimum payments on the rest of the cards. Once the smallest is paid, roll that payment into the next debt. Now, why does that work? Well, quick wins keep you motivated. On to the second method, the avalanche method. Now, with that, you focus on paying off the card with the highest interest rates first. And this will save you the most money in the long run. Now, why does it work? Well, it's math-backed efficiency. So here comes the handy pro tip. If you've got high interest debt, avalanche is usually the smarter choice. But if you need motivation, start with Snowball. Pick a method and commit. On to step 3. Cut expenses and free up cash. Now, this isn't easy, but you can't pay off $20,000 of debt while spending like you're debt-free. So take a magnifying glass to your budget and start slashing unnecessary expenses. Cancel those subscriptions that you're not using. Yes, even Netflix. Stop dining out and learn to cook simple meals. Sell items that you no longer need. Now, why all this? Well, every dollar saved is a dollar towards your freedom. So think of it this way. Every $100 you put towards debt is $100 closer to being stress-free. On to step 4. Negotiate with creditors. Now, you don't have to pay full price for your debt. Contact your creditors and negotiate. Ask for lower interest rates. Or request a hardship plan if you're truly struggling. See if they'll waive fees. Now, here's the pro tip, and it's essential. If you're polite but persistent, many companies will work with you. And if you're overwhelmed, well, credit counseling agencies can help you negotiate for free. On to step 5, an important one. Consider balance transfers or consolidation. If your credit score isn't completely in the dumps, consider balance transfer cards. Now, some offer 0% APR for 12 to 18 months. And if you move your high interest debt, you'll focus on paying it down a lot faster. With debt consolidation loans, what you can do is roll your debt into one payment with a lower interest rate. It simplifies things, and believe me, it can save you thousands. Now, here's the warning. These options will only work if you stop using your credit cards while you're paying them off. Otherwise, you guessed it, you'll just dig yourself a deeper hole. On to step 6. Not easy, but turbocharge your payments with a side hustle. If you want to knock out your debt faster, start by earning some extra cash. Maybe you can drive for Uber or Lyft. Maybe you can do some freelance work online. Maybe you can sell handmade products. Now, here's that vital pro tip. Every extra dollar that you earn should go directly to your debt. So imagine paying $500 extra a month. That's $6,000 a year gone from your debt pile. On to step 7. Protect yourself from debt traps. Now, while you're paying off debt, please avoid these common traps. Number 1, don't open new credit cards. Don't fall for debt settlement scams. Avoid payday loans at all costs. And your pro tip? Build a small emergency fund, $1,000, maybe a good start, so that unexpected expenses don't throw you back into that debt cycle. So here's where I close the loop and continue my story from the beginning of the video. So after organizing my debt, choosing the avalanche method, and the hardest bit, cutting down my spending, I still wasn't making much progress. Then I found a 0% balance transfer offer that allowed me to consolidate my debt. And that gave me breathing room to attack the principal and finish paying it off in just 18 months. And guess what? That moment of freedom was worth every single sacrifice, and you can do it too. So here's the call to action, guys. Got $20,000 of debt or more? Don't let it control your life. Follow these steps, and you will be on your way to financial freedom. Have a great day, guys.
Okay, I've got to admit, this is my very favorite video to make because it's funny, but also not funny. So whatever you do, just sit back and enjoy. Now, over the years, I've heard people say some wild things to justify not fixing their credit. And believe me, I get it. Taking charge of your finances can be very, very scary. But some of these excuses, honestly, they're so ridiculous. I just had to share them with you. So today, for a change, we're counting down the 10 best excuses that people use to avoid fixing their credit. And yes, I promise you, I've heard every single one of these in real life. So let's see if your excuse makes the list and why it's time to leave it all behind. And here's a spoiler alert. Number 7 might just blow your mind. So just before we dive in, let's talk about why fixing your credit even matters. Well, your credit score is your financial resume. It determines whether you get approved for a loan, how much you'll pay in interest, and even if you can rent that dream apartment or snag that new job. Bad credit? Well, it's like trying to win a race with a flat tire. It just slows you down and it makes everything harder. So, if you've ever told yourself one of these excuses, listen up, because I'm here to bust them absolutely wide open. So here we go with the top 10 excuses for not fixing credit. Number 1, I don't need credit. Really? You don't need credit? Well, got news for you. Unless you're planning to live off the grid in a cabin with no bills, you absolutely do need credit. Even if you've got cash, lenders and landlords check your credit to see if you're reliable. And no, monopoly money just doesn't cut it. Number 2, I'll do it later. Really? This one's a classic. Sure, you'll get to it someday. But here's the thing. The longer you wait, the harder it gets. Bad credit just doesn't go away. It grows like a weed. Fix it now, and future you will thank you. Number 3, it's too complicated. Credit repair sounds complicated, but it's really just about taking small steps. Pay your bills on time, reduce your debt, and challenge any errors on your credit report. And if it feels overwhelming, that's what I'm here for, to make it simple for you. Number 4, I don't want to pay for credit repair. Really? You'll spend hundreds a month on coffee, streaming services, or eating at McDonald's, but $129 a month to fix your credit? Nope. That's where you draw the line. So fixing your credit isn't a cost, it's an investment that can save you thousands in the long run. Number 5, I'll just wait for it to fall off my report. Got news for you. Bad credit doesn't magically disappear, and even when it does, the damage lingers. Plus, lenders look at your credit history, not just your score. Waiting for it to fall off, well, it's like waiting for your house to clean itself. Good luck with that one. It's not going to happen. Number 6 excuse, I'm too busy. Well, we're all busy, but let me ask you this. How much time do you spend scrolling through social media? Because if you've got time for TikTok, I've got news for you. You've got time to fix your credit. It's all about priorities. Number 7, here's the magical one. I don't believe in credit scores. Well, not believing in credit scores doesn't mean that they don't affect you. They're like gravity. You can deny it all you want, but it's still pulling you down. So learn how the system works and use it to your advantage. Number 8, my friend or family member will co-sign for me. Now, co-signing might sound like a quick fix, but it's a recipe for disaster. It ties your financial fate to someone else's. And lenders still check your credit. Plus, why rely on someone else when you can take control yourself? Excuse number 9. I tried it before and it didn't work. Well, credit repair isn't a one and done deal. If you've been scammed or you've tried DIY methods that didn't work, I get it. But don't let one bad experience hold you back. You wouldn't stop exercising because you didn't lose weight overnight, right? Here's excuse number 10. I'm scared it'll get worse. Now, fear is valid, but inaction guarantees your situation stays the same or even gets worse. Taking the first step is hard, but once you do, you'll realize it's not quite as scary as it may seem. Imagine the relief of having good credit instead of living paycheck to paycheck. So, ladies and gentlemen, those are the 10 best excuses I've heard for not fixing credit. Are they funny? Sure. Are they good reasons? Not even close. The truth is, excuses keep you stuck, but action moves you forward. Are you ready to stop making excuses and start fixing your credit? Do me a favor, hit that like button, comment below with your favorite excuse, and subscribe for more tips on how to take control of your financial future. And do me a favor, guys, let's leave the excuses behind and start building the kind of life that you deserve. Have a wonderful day.
Oh, no. You've hit rock bottom. Collections, repossessions, maybe even bankruptcy. Feels like your world is falling apart, right? Creditors breathing down your neck, zero breathing room in your bank account. But let's get real. This crisis you're going through doesn't have to be your end game. And today is where your comeback starts if you follow these steps. So step 1, face the reality. Know where you stand. I'm talking about pulling your credit report from all 3 bureaus and then dig into every line, every detail. It might sting, but trust me, this transparency is power. It's where you go from surviving to strategizing. Next up, prioritize those debts because not all debts are created equal. High interest debts, well, they're like leeches on your financial life, and you need a battle plan, and that means setting up payment plans with your creditors. Call them up, negotiate. Yes, it's uncomfortable, but it's also necessary. And you'd be surprised how many creditors are willing to negotiate. It's in their best interest too. Step 3, rebuild. And I don't mean by opening every credit card under the sun. Get a secured credit card or a small credit builder loan. These are tools, not tricks. Start small, make on-time payments religiously, and let those small wins stack up for you. Next up, let's talk budgeting. Now, this isn't a boring chore, it's your road to freedom. List every dollar that you bring in, every cent that goes out. You're not just cutting costs here, you're creating the cash flow that'll fuel your rebuild. Use tools like Mint. You need a budget or even just a simple spreadsheet. Track it, own it. Now, next up, start an emergency fund. Yes, even if you're barely scraping by, open a separate account, deposit whatever you can, even if it's only $10 a week, because guess what? Life doesn't stop throwing curveballs. And an emergency fund, well, it's your financial armor. Finally, protect what you're building. Monitor your credit reports every few months to catch errors or signs of fraud early on. Set alerts. Invest in ID theft protection if you can. You've come too far to let someone else mess up your progress. Rebuilding your financial life after a crisis, well, it isn't for the faint of heart. It takes grit, consistency, and a relentless commitment to creating a new normal. But here's the truth. If you stay in the game and follow these steps, you'll look back at this crisis as the launch pad to a stronger, smarter, financially resilient you. So, are you ready to own your comeback story? Let's get to work. Have a great day. Hey everyone, welcome back to the channel. Today we're diving into credit builder loans. Now these are one of the most effective tools to help you boost your credit score quickly and easily. But first, let's talk about what a credit builder loan actually is and how it works. So a credit builder loan is a type of loan designed specifically to help people build or rebuild their credit. Now, Unlike traditional loans where you get the money up front, then you pay it back over time, a credit builder loan works the other way around. With a credit builder loan, you make monthly payments and that money is held in a secured account. Only after you've made all the payments will you get access to the funds. Now, the key benefit of a credit builder loan is that the lender reports your payments to all 3 major credit bureaus. So by making regular on-time payments, you create a positive payment history, which of course is one of the biggest factors in improving your credit score. It's a low-risk way to build credit because you don't have to worry about borrowing a large amount of money up front. Instead, you're paying into your own future savings while improving your credit. So now that you know how these loans work, let's dive into the top 3 credit builder loans that can help you boost your credit score fast. So first on the list is the Self Credit Builder Loan. This one is a favorite for many, and here's why. Self offers flexible loan terms, so you can choose how much you want to pay every month, starting as low as $25 a month. Now that makes it accessible for pretty much anyone. The great thing about Self is it doesn't require a credit check to get started, which means you won't be hit with a hard inquiry on your credit report. Instead, you make payments to yourself, and as you pay off the loan, they report it to all 3 major credit bureaus. So, as long as you're making your payments on time, what you're doing is building a positive payment history, which of course is one of the most important factors in improving your credit score. And the best part? Well, once the loan is paid off, you get your savings back, minus a very small administration fee. So this makes it a low-risk way to build credit and save money at the same time. Now, if you're looking for flexibility and a simple way to boost your score, Self is a great choice. Next up on the list is the Credit Strong Credit Builder Loan. Now, what makes this loan stand out is the no upfront deposit feature. So with Credit Strong, you don't need to put down any money to get started, unlike many of the other credit building options. But instead, you make fixed monthly payments that help build your credit. Now, Credit Strong also allows you to customize your loan term and your payment plan, which again is great because it means you can tailor it to your budget. And just like Self, Credit Strong reports to all 3 major bureaus, which helps you build a positive payment history. They actually even offer a variety of plans, from short-term loans to longer ones, so you can choose the option that best fits your goal. Another great feature is that there's no penalty for paying off the loan early. So if you do get to be in a position to pay it off ahead of time, you can do so without any extra fees while still benefit from the credit reporting. Now, Credit Strong is an excellent option for anyone looking for flexibility and customization in their credit building journey. So last but not least, we have the MoneyLion Credit Builder Plus loan. Now, what makes MoneyLion unique is that you can get instant access to part of your loan as soon as you're approved. That's right. Unlike traditional credit builder loans where you don't access the money until the loan is fully paid off, MoneyLion lets you tap into a portion of the funds right away, giving you a little financial flexibility. And on top of that, MoneyLion provides credit monitoring tools as part of their package, so you can keep an eye on your progress and watch your credit score improve in real time. Now, the payments are affordable. They start around $19.99 a month, and like the other loans on this list, your payments are reported to all 3 credit bureaus, ensuring that your on-time payments are helping build your credit score, of course. Now, another feature I love is their credit monitoring tools, and that helps you track your credit progress along the way. It's a great choice if you want to build credit while also accessing some funds for immediate needs. Plus, with MoneyLion, you're getting more than just a loan, you're getting a full financial toolkit. So, there you have it. 3 of the best credit builder loans that can help you boost your credit score in 2024 or even 2025. So whether you go with the flexibility of Self, the customization of Credit Strong, or the instant fund access and credit monitoring of MoneyLion, each of these options can put you on the right path to financial freedom. And remember, building credit takes time, but with consistent payments and responsible use, these credit builder loans can help you improve your payment history, your credit mix, and your overall score. But the key, as I say, is to make your payments on time every month and keep an eye on your progress. So let me know in the comments below which credit builder loan sounds like the best fit for you. And if you found this video helpful, don't forget to like, subscribe, hit the notification bell for more tips on building credit, financial freedom, and improving your credit score. And thanks again for watching. See you in the next video. Do you need a quick credit score boost? Maybe you want a loan, a rental, or you just want to get back on track. So today, I'm going to give you the fastest, most effective ways to fix your credit score in a very short time. Now, these aren't just any tips. They're actually proven methods to get results today. So please stick around because every second counts when it comes to getting your credit in shape fast. All right, buckle up, let's go. So the fastest way to lift your score is reduce your credit card balances to lower your utilization rate. Aim for less than 30% of your credit limit, but if you can, get it down to 10%, and that's even better. So let's say you've got a $1,000 limit. Try to keep your balance under $100. Why? Because this simple move can give your score a lift in just a few days, especially if you pay down before your card's statement closing date. Now, next up, here's a quick hack. Get added as an authorized user on someone else's credit card. So if a family member or a friend has a card with a long positive history and a low balance, ask them to add you. This can add their credit history to your report, and obviously that gives your score an instant boost. But here's the issue. Just make sure, please, that there's someone responsible or this could backfire on you. Next up, check your credit report for any errors. Now, believe it or not, mistakes like incorrect balances, late payments that aren't yours, or even duplicate accounts can be dragging your score down. So, if you do find an error, do me a favor, file a dispute with the credit bureau. It's free, and this is the best bit, they're required to investigate within 30 days. Now, removing even one mistake could give your score a very fast lift, so it's definitely worth it. If you've been a responsible cardholder, it's also a good idea to ask for a credit limit increase. A higher limit, as you probably gather, immediately lowers your credit utilization, which in turn gives your score a quick boost. Whatever you do, just don't spend that extra credit. Now, many issuers will let you request an increase online, and some might even grant it automatically if you have a good payment history. So, if you're looking to stabilize your score, here's my advice on that one. Make small payments multiple times throughout the month. Now, why? Well, this keeps your reported balance low, and it also shows lenders, and this is the important thing, that you're actively managing your debt. So, even a few extra payments here and there, I promise you, will help smooth out your utilization, and again, this is the point of the video, give your score a steady lift. Now, timing is everything. So paying off your balance before the statement closing date ensures a low balance is reported to the credit bureaus. And again, when your utilization looks low, your score will get a nice boost. So do me a favor, if you can, make it a habit to pay down your balance a few days before your statement closes. And this will keep your score in great shape. Now, those are the fastest way to boost your credit score today. These quick fixes, they might seem simple, but trust me, they can make a big difference. Which one are you going to try first? So do me a favor and let me know in the comments below. And hey, if you found this video helpful, please like, subscribe, and share. And mainly the share because it helps others get the credit boost that they need to. Have a wonderful day, guys.
Hey everyone, it's Steve from Compassionate Credit Repair yet again. So today we're diving into a really big question for anyone with less than perfect credit. Is a consolidation loan a good idea, or is it a disaster waiting to happen? So let's break it down. Okay, first things first, what exactly is a consolidation loan? Well, it's a loan that allows you to combine all your debts into one single payment. Sounds pretty sweet, right? But there's a big catch, and that's where your bad credit comes in. So let's start with the good stuff. What are the potential benefits of taking out a consolidation loan when you have bad credit? So first up, simplified payments. Instead of having to juggle 5 or 6 different bills with different due dates and interest rates, you're just dealing with one loan and one payment. It's easier to manage, and of course, it can help you stay on track. Next, you might be able to lock in a fixed interest rate, and what that means is no crazy fluctuations in what you owe, which could be a lifesaver for your budget. And lastly, by consolidating your debt, you might free up some cash flow. No more stressing over minimum payments because you're paying off one loan instead of getting hit with multiple fees. And that's the good side. But hold up. It's not all rainbows and sunshine. Now, let's get to the downsides of consolidation loans, especially if you have bad credit. So, disadvantage number 1, high interest rates. If your credit score isn't great, lenders see you as a risky borrower, and that means you could end up with a consolidation loan that has just as high or even higher interest rates than the debts that you're trying to consolidate in the first place. You're essentially swapping one problem for another. Absolutely. Next downside, you might get stuck with a longer loan term. Sure, your monthly payment is lower, but that's because you'll be paying it off for years. And in the end, you could pay way more in interest over time. Now, here's a pro tip. Before you agree to any consolidation loan, use a loan calculator to see how much you'll actually end up paying over the life of the loan, because you might be surprised at how much more that you'll owe. Finally, and this is the big one, a consolidation loan doesn't fix the root problem. If you're in debt because of bad financial habits or overspending, a consolidation loan just sweeps it under the rug. The debt is still there, and without addressing your spending or your saving habits, you could end up in an even worse situation. There's no doubt about it. So the question is, should you get a consolidation loan if you have bad credit? Well, it depends on your situation. If you've already worked on your budget, fixed your spending habits, and you're just looking to simplify your payments, then guess what? It could work. But
If high interest rates or long loan terms are part of the package, you may want to rethink it. You want my advice? Well, before jumping into a consolidation loan, take a step back. Look at your credit report. Fix any negative marks. If you can raise your credit score, you'll get much better loan terms. And at Compassionate Credit Repair, we specialize in helping people like you clean up their credit so they can make better financial situations. And remember, the better your credit, the better loan options you'll have. So do me a favor, don't rush into a consolidation loan that might make things worse. Anyway, guys, hope this advice was useful. Do me a favor, smash the like button and subscribe for more information on how to deal with bad credit. Have a wonderful day. Imagine if you could send one letter, a single powerful letter that forces collection agencies to either prove that they own your debt or delete it from your credit report altogether. Sounds almost too good, right? Well, that letter is real and it's called a debt validation letter. So today, I'm going to reveal exactly how to write it, what you need to include, and how to use it to erase collections for good. And trust me, watch this right to the end because this letter could change your financial life. And hey, if this video helps you, please remember to like, comment, and subscribe so that more people can access these game-changing tips and take control of their credit too. So let's start with what a debt validation letter actually is. Well, under the Fair Debt Collection Practices Act, collection agencies are now legally required to provide proof that they actually own the debt and that they have the right to collect it. A debt validation letter requests that proof, and here's the kicker. If they can't validate it, they legally must remove it from your credit report. Now, before you start writing, gather every bit of information about the debt. Look at your credit report, note down the account numbers, and make sure you have the agency's contact details. This letter is all about specifics, so being precise will strengthen your case if they try to come back with incomplete information. Now, here's where you get specific. Start your letter by stating clearly that this is a request for validation of debt under the FDCPA. Include the account number, the amount they're claiming, and a request for all supporting documentation proving that the debt is valid and that they're authorized to collect it. Now, be firm, but also be polite. You're not admitting the debt. All you're doing is requesting proof. Now, in your letter, ask for specific information. Proof that the debt is yours, like the original signed contract. Documentation showing that the agency has the legal right to collect. A full breakdown of the amount, including fees and interests. Details on when the debt was last paid. Now, these requests make it tough for the collection agencies to respond fully if they lack the original paperwork. Without it, they may have no choice but to drop that collection. Now, this part is crucial. Send your debt validation letter by certified mail with a return receipt requested. This way, you actually have proof that they received it and a timeline showing that they need to respond within 30 days. If for any reason they can't validate the debt within that time, you have absolute grounds to request its removal from your credit report. After sending this letter, watch your credit report and keep an eye out for responses. If they fail to respond or they can't provide complete validation, follow up with the credit bureaus to request removal of the collection. Now, collection agencies know that debt validation letters can derail them. So persistence is the absolute key. And there you have it, the debt validation letter that can remove collections from your credit report legally. With these steps, you're standing up for your rights and you're holding collection agencies accountable and, of course, protecting your financial future. So whatever you do, don't let collections keep dragging down your credit. Have a great day, guys. Thank you.
Years ago, I was drowning in debt. I had collection calls daily, letters were piling up, and there was just no way to pay. Then one day, I stumbled across a loophole, a way to legally remove old debts from my credit report without spending a single dime. Sounds too good to be true? Well, it's not. So stick with me, because I'm about to share the same strategy that helped me rebuild my credit and change my life. But first, let me tell you about the mistake that almost cost me absolutely everything. All right, guys, buckle up. Let's get into this. So the key to this strategy lies in understanding the Fair Credit Reporting Act, the FCRA, and how it protects you. This federal law gives you the right to dispute inaccurate, outdated, or unverifiable information on your credit report. And here's the kicker. Most old debts fall into at least one of those categories. So this is what you should do. First up, pull your credit report from all three bureaus, Experian, Equifax, and TransUnion. Now, you can do this for free once a year at annualcreditreport.com. Once you've got it, look for debts that are over 7 years old, because by law, most negative items must be removed from your report after 7 years from the date of the first delinquency. Now, here's where things get a little bit interesting. Go through every single detail. Is the debt amount correct? Is the account even yours? So creditors and collection agencies often make mistakes, and they're required to prove the accuracy of the debt if you dispute it. And spoiler alert, they usually can't. Now, once you spot an error or an outdated debt, immediately file a dispute with the credit bureau that's reporting it. Now, you can even do this online, or you can do it by mail, or even over the phone. The bureau will investigate and contact the creditor or the collection agency. If they can't verify the debt within 30 days, then boom, it gets deleted. Now, have you ever heard of a 609 letter? It's a formal request to the credit bureaus, and it demands proof that the debt is valid and that they have the legal right to report it. What this does is it puts the burden of proof on them, and if they can't provide proper documentation, the debt must be removed. By the way, if you want a template of the 609, send me an email. My email address is listed in the description below. And now, please, whatever you do, do not contact the collection agency directly or agree to any payments without fully understanding the law, because if you do, you can restart the statute of limitations on the debt, keeping it on your report much longer. So, remember the mistake I mentioned early on? I almost gave up and paid off a debt I didn't even owe. But once I learned these strategies, I took back control of my credit, and now I'm here to help you do exactly the same. So do me a favor, guys. If you found this helpful, hit that like button and subscribe. And do me a favor, share this video with someone who really needs it. Let's help more people like you break free from bad credit and start fresh. And by the way, if this feels overwhelming, don't worry. Compassionate Credit Repair is here to handle the heavy lifting for you. And if you check the link in the description below, you'll see all our details and you can get started today. Have a great day, guys.
Hey there, credit warriors. It's Steve from Compassionate Credit Repair, and once again, welcome back to my channel. So today, we're going to talk about something that might sound terrifying, but really isn't, if you know what to do. And that's removing collections from your credit report. Yes, I said remove. And no, it's not magic. It's just knowing the right steps to take in 2024. Look, collections can feel like those unwelcome house guests that refuse to leave. They're ugly, they're stressful, and worst of all, they tank your credit score. So let's get into the nitty gritty right now. Whether the debt is yours or not, here are the three main strategies to get those collections off your report in 2024. And spoiler alert, one of them involves a little negotiation. So you might just want to practice your "I'm so serious" face in the mirror just before you do anything. So, first things first, you have to make sure they verify the debt. And just because a collection shows up on your credit report doesn't make it legitimate at all. Shocking, right? Well, a lot of times collection agencies make mistakes. There you go, I said it. Now, they might be listing something that's not yours, or get this, they don't even have the legal right to collect it in the first place. So, ask for validation. You can send what's called a debt validation letter to the collection agency. Now, this forces them to prove that you owe the debt. Absolutely. And trust me, if they can't validate it, they have to remove it from your report. So, sayonara, collection, adios, goodbye. And here's the good news. If you want a free copy of the debt validation letter, just like and subscribe below, please, and I'll email you a copy. So it's as easy as that. Now, remember, the burden is on them, not on you. So make sure to question everything like you're Sherlock Holmes, but without the magnifying glass. So that's the first step. Okay. So what if the debt is actually legitimate? Can happen. This is where a little bit of charm and a lot of persistence come into play. So I'll say that again: charm and persistence. You can negotiate something called a pay for delete. Now, this is when you offer to pay the debt in exchange for the collection agency removing the negative item from your credit report. Excuse me. But, and this is the big but, get it in writing first. Verbal agreements are nice, but written agreements, well, they last forever. Think of it a little bit like bribing someone with a cake, except instead of cake, you're actually offering money. And instead of a party, what you're getting in return is a clean credit report. Win-win, right? Now, let's say you tried verifying, you tried negotiating, but the collection is still there, haunting your credit report. It's still there, it's not gone. And that's when you go straight to the credit bureaus themselves. So you can file a dispute directly with the credit bureaus, Experian, Equifax, and TransUnion, and you can file a dispute either online or by mail. Now, when you dispute an item, by law, they have 30 days to investigate if they find something inaccurate. And then, boom, it's gone. It's a little bit like the Karen strategy for credit repair. If you're not getting what you need from the agency, go straight right to their boss. Just like that, just like Karen would do. All right, so here's a quick recap. Step 1, verify the debt. Make sure it's even legitimate. Step 2, if it is legitimate, negotiate a pay for delete. And step 3, if they still won't budge, dispute it with the credit bureaus like you mean business. So there you have all 3. Now follow these 3 steps and trust me, you're well on your way to a cleaner credit report and a much better score. Remember, collections, they don't have to be forever. You've got the power to take control of your credit. And with a little persistence, you can kick those collections straight to the curb. So, go get them, credit warriors. And hey, if you found this video helpful, please give it a thumbs up and subscribe below for more tips on how to boost your credit score in 2024. And finally, remember, nothing, and I mean nothing, feels as good as a clean credit report, except maybe pizza, but that's a whole other video. So either way, guys, have a wonderful day. Stay tuned for the next video and take care.
Charge-offs can feel like the kiss of death on your credit report, right? No, wrong. In this video, I'm going to show you exactly how to delete every single charge-off that's holding you back. No fluff, no scams, just proven strategies. But before we dive in, smash that like button, hit subscribe, and share this with someone who needs to reclaim their financial freedom. Let's expose the credit repair secret that they don't want you to know. So what exactly is a charge-off? Well, it's when a creditor basically gives up on you paying your debt and it marks it as a loss on their books. But here's the kicker. They don't really give up. They either keep harassing you, sell your debt to collections, or, worse still, just let it sit there and absolutely destroy your credit score. Sounds like a nightmare, right? Well, not for long. So buckle up, guys. Here are the steps. Number 1, know your rights. Thanks to the Fair Credit Reporting Act, you've got the power to challenge anything that's on your credit report that's either inaccurate, unverifiable, or incomplete. And guess what? Most charge-offs fall into at least one of these categories. So next up, please pull your credit report from all 3 bureaus, Experian, Equifax, and TransUnion. Look at the charge-off details, and is the amount consistent across all 3? Are there errors in the dates or account statuses? Even the smallest error can be your golden ticket to getting it removed. Step 3, send a debt validation letter to the creditor or collection agency. Now, this forces them to prove the debt is legitimate and report it accurately. If they can't provide proper documentation within 30 days, then boom, you've now got grounds to demand removal. On to step 4. Dispute the charge-off directly with the credit bureaus. Now, this isn't just a generic, I dispute this debt letter. Craft a precise dispute citing the errors that you found. Be specific, be factual, and attach any supporting documents. Remember, the burden of proof is on them, not on you. Now, if the charge-off is valid, don't worry, you can still negotiate. Contact the creditor or the collections agency and request a pay-for-delete agreement. In exchange for payment, they'll agree to remove the charge-off, but get it in writing before you pay a single dime. Now, here's the real secret. If the bureaus or creditors don't play ball, you can escalate your complaint to the Consumer Financial Protection Bureau. Trust me, when the CFPB gets involved, things get resolved really quickly. Creditors and bureaus hate the heat of federal oversight. So there you have it. Every single step that you need to delete those charge-offs once and for all. No gimmicks, just facts. Now it's time for you to take action. Like this video, subscribe to the channel, and drop a comment below. What's holding you back from a better credit score? And let's get your story featured in our next video, because together we're transforming lives one credit report at a time. Have a great day, guys. Negative accounts on your credit report can feel like a weight that you'll never shake off, but here's the reality. You can legally delete negative accounts from your credit report, and I'm about to show you exactly how to do it. No shortcuts, no tricks, just powerful, proven strategies to clean up your report and take control of your credit future. So let's get into it, guys. The first step, pretty obvious, get your complete credit report. What you should do is go to annualcreditreport.com and download your reports from Experian, Equifax, and TransUnion. Now you've done that, go through each report like Sherlock Holmes. Mark every negative account, late payment, charge-offs, collection, anything that's dragging down your score. And this, my friends, is your starting point. Next, look for any errors. Now, about 1 in 5 people have mistakes on their credit reports, and each mistake on yours could be pulling your score down. Dispute these errors directly with each credit bureau. Now, the bureaus have 30 days to investigate, and if they can't verify an item, then guess what? It has to be removed. This alone could eliminate a few negative accounts and give your score an instant boost. Now, say you've had a good history with a creditor, and maybe unfortunately you slipped up once or twice. Consider sending something called a goodwill letter. Explain your situation honestly and ask if they'd consider removing the negative item as a goodwill gesture. Creditors are more open to this than you'd think, especially if you've had a long positive history with them. A single letter could make that big difference. Now, here's a powerful strategy if you've got collections. Negotiate a pay-for-delete agreement. What this means is you offer to pay off the debt, and in return, the collection agency agrees to delete the account from your report. Now, warning, not every agency will agree, but many do. Just make sure you get it all in writing. Removing collections, as you probably know, is a game changer for your credit score. So if you have an account in collections that you don't recognize or seem suspicious, send a debt validation letter to the collection agency. They're legally required to provide proof that the debt is valid, and more importantly, they have the rights to collect it. If they can't, they must remove it from your report. This step is crucial for cleaning up any unverified negative accounts, and trust me, it works. So if you have accounts close to aging off, call the credit bureaus directly and request something called an early exclusion. For example, Experian often allows early removal 6 months before the account's drop-off date. Now, this is a little-known tip, but it's effective. With a simple call, you could get old negative items removed a lot sooner than you expect. Now, coming up, here's the final step. Monitor your progress. Check your report every few months to make sure all the changes are accurately reflected and, more importantly, dispute any new errors that you find. Credit repair in itself is a process, and believe me, persistence pays off. So by repeating these steps, you can keep your report clean and, more importantly, your score rising. So there you have it. A clear, powerful strategy to delete negative accounts from your credit report legally. From disputes and goodwill letters to debt validation and early exclusions, each step gets you a bit closer to a clean report and a much brighter credit future. So do me a favor, guys. Take control, follow these steps, and see how your credit score and your financial opportunities transform. Remember, your credit past doesn't have to hold you back. Use these strategies, take action, and start building the kind of financial future that you deserve. Have a great day, guys.
Hey, you! Yes, you! Do you want to boost your credit score by up to 100 points without taking out new loans, making major changes, or even waiting years? That sounds way too good to be true, right? Well, it's not. Stick around because in the next 2 minutes, I'm breaking down exactly how you can do this by becoming an authorized user on someone's credit card. And I'll tell you why this method works, how to do it the right way, and why you need to start using this strategy today if you're really serious about your credit. Now, trust me, this video is short, but you want to watch it all the way through because these steps can fast track your credit score in as little as 30 days. So let's dive in. So, an authorized user is someone who's added to another person's credit card account. And here's the best part: you don't need to spend a single dollar. Just being on the account lets you benefit from their good credit history. When you're added, the account's entire credit history, on time payments, low balances, all of it gets reported on your credit report. So this boosts your credit age and improves your credit utilization. And that's why this hack works so quickly. Your score can improve within 30 days. And if you're starting from a low score, you could see a boost of anywhere up to 100 points. But here's the catch: you need to be added to the right account. So make sure the cardholder has a solid history, low balances, and no missed payments. Otherwise, their bad credit will hurt you too. So let's talk impact. Well, according to Experian, becoming an authorized user can raise your score by 10 to 100 points, depending on your profile. And the best part? You're not legally responsible for any debt on the card, but at the same time, you get all the benefits of their good credit. So, how quickly can you see results? Well, usually within 30 days of being added as an authorized user, that credit card's history starts showing up on your report. And you'll start seeing the positive impact almost immediately. So, to recap, becoming an authorized user is one of the easiest ways to boost your credit score quickly. Make sure the account is solid, and you could be looking at a big improvement in as little as a month. So, this helped you out. Hit that like button, subscribe for more actionable credit tips, and let me know in the comments, are you planning to try this out? Because trust me, it really works. Good credit is just one strategy away, so start boosting your credit score right now.